Ladies and gentlemen, I give you the one and only CEO of the Lobien Realty Group, Sheila Lobien.
What I'd like to share this morning is, of course, an outlook of what's going on in the office market, which we see a lot of news lately about, BPO being allowed to work 100% work from home, and then POGOs, the controversies surrounding that. Of course, I'll also talk about the residential market, the warehousing market, which is booming today because of the growth of, the growth in e-commerce. And then finally, give you some of our key takeaways and how we see things moving forward. Now, let's go and look at what's happening in the office market. There are a lot of talks right now. And if you are following this, so many things are happening and people are saying, hey, Sheila, what will happen in the office market? Will people still use it, need it, etc.? So these are some of the concerns. And we see a lot of people who are now again back to work. So this slide, what's the story here? It's quite a busy slide, but what I'd like to share, what we would like to share is that, again, the office market is sensitive to what's going on in the economy. And if the economy is doing well, our GDP is high, rental rates is also moving up, simply because, when the market is good, companies will employ, would need office space, people have money, they'll buy properties, and therefore prices of land, prices of property, rentals also will move up. Today, where we are, 19% vacancy rate. It's not single digit anymore. It's 4 times higher compared to the pre-pandemic levels. And what we are trying to say here is that today is officially a tenant's market. So it's the best time to negotiate with building owners, landlords out there, and to look at the best buildings out there, to locate there and get a good deal. Vacancy rate. But these are, there are some good news already. If we are to compare third quarter 2020 versus third quarter 2021's performance in terms of take-up, 8% only last third quarter 2021. But today, we've seen doubled 16%. And because of, companies are asking their employees to go back to work. And we see that. That's why we are also here in the office today. So the take-up has doubled, and this is good. However, in terms of rental, it has gone down a bit from 1,170 pesos per square average. It's down by 20 pesos, so 1,150 pesos average per square meter across Metro Manila. Now, in the provincial market, there are also office spaces being built there. I would say 20% of the total stock are actually spread all over the Philippines. And what's driving this, of course, is the growth also in the outsourcing industry. So these are the township mixed-use developments. And our sponsor, Mega World, actually, they have a lot in all of these places. So mixed-use, wherein you live, work, and play in one area. It's actually sustainable, too. And it's not a trend. It's going to be like that moving forward. So the vacancy rate in the provincial area is higher compared to Metro Manila. The take-up in the last 12 months also is not that high, simply because there are a lot of people who are still working from home, and the rents have really not gone down. So it's always a wait and see. Landlords, they have to adjust a bit to lease their properties today. So when you look at the rent in the provincial area, it's half compared to the Metro Manila market. So if there are a lot of outsourcing companies who go in the provincial areas to tap fresher and affordable labor market, and at the same time, more affordable rental rates as well. And then the tourism and hotel market, the hardest hit subsegment of the real estate market. And tourism is very close to my heart. As the fourth mentioned, I graduated from UP. I took up tourism because I really love to travel. And because of this lockdown in the past, tourist arrivals in the country obviously went down. Pre-pandemic, we have seen the highest in terms of tourist arrivals. So 8.2 million visitors in the country. And we thought it will go, up and up and up. Unfortunately, no. And it went down to less than 1.5 million in 2020 because, of course, people cannot travel. It went down again in 2021. But the good news is the first half of 2020, it's already higher compared to the whole year of tourist arrivals in 2021. Now, the revenue of hotels in the Philippines, the hotel industry, they're very optimistic. And I attended a recent hotel conference here in the country, and they're quite optimistic. And there are a lot of, five-star premium hotels that are being built now in the country. And in the next 3 years, they're forecasting that they'll be able to have a pre-pandemic revenue levels in actually next year. So we hope that that will really happen. Now, the warehouse and the storage market, the brightest spot in the Philippine real estate subsegment, because everyone's buying things online. It's growing. The forecast is that it will grow by 8.2% in the next 3 years. And we see that a lot. People are buying things online. The entire logistic and warehouse industry is projected to reach 1.1 trillion in terms of revenues in 2 years' time. We're ranked 60th out of 169 countries in logistics performance. So there is a lot of room for growth there. And I'm sure the current administration will continuously work on this, the Build project, etc. Now, a bit on this, because this is something new, the Real Estate Investment Trust, and I'm sure you've heard of this, and I can't finish my talk without discussing this. These are the opportunities also, and many big developers, as you can see on screen, they have a Real Estate Investment Trust, and so far they're performing so well. And big, in the first world countries, they have this very successful. That's why we want to have this also in the country. So far, the big companies, the big developers are doing well in this front. If you look at their performance quickly, you'll find that the market cap is quite big already, 43 billion peso on average, and the revenue is positive. What they've forecasted or promised the investors, the yield estimate of 6.768, almost all of them, the average dividend yield is 6.750. So that's good, meaning they're very near to what they have committed and expected. And it means that the REIT is actually a very, quite stable vehicle, another real estate investment vehicle out there. Of course, I'll touch a bit on the marketing technology bit, digitalization that we are doing and many companies out there are doing. Just quickly, company website, I've shared that almost everyone now, they have a website. Properties, you can find it online. You can Google it and search everything. So somehow you should be able to do that. Otherwise, your broker should be able to provide you with information. There are, YouTube virtual vlogs. In the past, you have to go back and forth and see the property. Today, usually the final inspection. So I will not advise you to just buy properties without looking at it. It's a very big investment. You have to go feel it, see it. Sometimes I don't think people can just buy a multi-million property without even looking at it and feeling the area. If there are instances like that, I would think it's not that, it's not normal, it's not often. And then there are these 3D virtual tour as well. You can see the whole area with that. And if you like it, then you can go and visit the site. And online property listings that are actually live, and you can see whether it's taken or still available. Developers, brokers are using this today. And the CRM integration, customer relationship management, somehow artificial intelligence is here, matching your property with the right buyer, etc., and helping us do our jobs easier. And just to summarize what I have shared, these are the key takeaways. I have a 3+1 here. So the office market, if there is something there that you should remember, as shared, it's a tenants market, meaning if you are renting a property right now, it's the best time for you to either, move to another property, improve that, because rents nowadays is quite soft and you can negotiate with your landlord. So there are several options out there. Use that as an opportunity to save on cost also, sign a long-term lease, get your preferred building, your dream office, whatever you like, all over the Philippines, especially here in the metro. In the residential market, as shared, the market has started to stabilize in terms of prices. As we've shared, the BSP residential real estate price index. There are many opportunities there in the locations that I've shown. So if you're in the lookout, it's actually time to start hunting again and negotiate and buy your dream property. The warehouse, the storage market, it's growing because of the growth in e-commerce, and it will continuously grow. Even in the provincial areas, people are buying things online. Now, the plus one is the property technology, which many companies, not just in the real estate industry, they're actually using it today, that technology bit. But for our, bit, our side, we call that prop tech, property technology. It's, using technology to create a better service or a better project. And in a way, it'll make us more efficient, agile. And now you see this not just in the brokerage, but in the developers' side, buildings, in the management of the building, in the construction of the building. There are so many advancements in this side